name is Suprakash, and I'm starting with the presentation right now by iCapital. So the topic name is the evolution of wealth management from traditional to innovation. Moving on to the topic. So first we'll talk about what does the topic means. The wealth management industry is basically undergoing into a transformation, right from the traditional part where we used to save the money in our cupboards and banks rather than in banks. We are now moving on to the more innovative parts such as investing, SIPs, and all those things. These all are the innovative driven ways using the technology and enhancing the wealth management. The evolution is driven by the changing client expectations and the technological advancement and much more complex financial landscapes. So let's talk about what exactly the wealth management is. Wealth management is basically a comprehensive financial system, a service that provides financial planning, investment planning, and other advisories to help individuals and families uh, to grow and transfer their wealth, basically. It is a strategy that approaches financial assets and liabilities. The goal of achieving specific financial goals, including the retirement planning, the real estate planning, the the taxation optimization, and other financial goals and other financial aspect, whatever that a human needs to achieve in its life. So, in basic term, wealth management is an investment advisory that service that provides financial management and wealth management advisory to wide range of clients ranging from high net worth to ultra net worth individuals to budget segment as well. So it is basically to deal with the income and expense in a longer term basis. Now let's talk about why the wealth management is important. So wealth management is important. We have taken both parameters over here in terms of profit, in terms of investment, and in terms of trade, also in terms of economic. So let's see one by one. Yeah. So the visual icon shows four contents, four parameters. Wealth management is basically crucial for profit generation, the helping individuals and business maximization their returns through strategic planning. Investment planning offers guidance or goals or where you want to invest to meet your financial goals. Sometimes you need to invest so that you can grow your money. Money cannot be, saved or it should be grown for a say. And through trade optimization, you can do ensure that efficient assets are bought and sell. Decisions can be optimized as well. So this is what trade means. And economic impacts, basically including borders or economic stability and growth by promoting financial literacy and responsive investing. So, economic impact could be if more and more people are uh, know the importance of wealth management, the growth and development of the region could be seen uh, as soon as possible. Moving on to the next slide, we have here is key components of wealth management. So, what are the key components? We have taken four key components over here. First one is investment strategy. Second one is tax planning. Third one is risk management, and fourth one is real estate planning. So if we talk about all these things, first key component, which is investment strategy, tolerated plans of associating assets to meet short-term and long-term financial goals. So investment strategy should be such a way that it should meet your short-term obligations, your medium-term obligations, and as well as your long-term goals. So something which is you need it for the short term. This it could be anything. It could be a car. It could be a bike. It could be anything in terms of assets. But if you talk about in long terms, it could be into a real estate, or it could be in something like uh, like any other investment in which you do in commodities segments as well. So the second one is tax planning. The minimization of tax liability is very much important so that you can save or you can invest that money into some other means so that you can grow your money rather than putting it in the tax bracket. Okay. So minimizing the tax liability through legal methods. For example, exemptions or deductions you have over there, you can reduce your taxes. uh, Mostly, third part is risk management. Again, risk management is identified as a mitigation of financial risk. Uh, for example, if there is an inflation, so you need to deal according to that. If there is a credit risk, if the rating of the agencies are not that are very poor, you won't be taking that risk. So that is called the risk management. What is the thing that is risky and what is the thing that is lower comparatively less risk? So you have to have a combination of all those things in order to achieve a good wealth management, a better wealth management. So real estate planning, arranging your assets, distributing your assets after death to reduce the taxes and ensure the legality. Of course, real estate planning is also necessary if there is any unforeseen event. So, who will be having your wealth or whatever you have grown till now, or who will be managing it? So, that is also a very important component. You need to plan that as well. Moving on to the next slide. We have here is types of wealth management clients. There are basically various types of wealth management plans. I've tried to include the most popular kind, I can say. So let's talk about first one, which is we have over here many like financial planning, asset allocation, asset management, and real estate planning and tax accounting. So first we'll talk about financial planning. Financial planning is basically goal based oriented. Like I have this much, I have to reach this much, I have this much amount, I have to reach financially that much amount in the near future. So that is what financial planning is actually all about. Uh, if we talk about second important thing, which is budgeting in financial planning. So budgeting is also very much important that if you have certain amount, like people manage their finances, uh, what all things are necessity, what all things are needs, and what all things are wants, and what all things are unnecessary. So these all combination are our expenses, and which we save or which we invest, that is leftovers. Okay, so budgeting the finances is comes under financial planning. Uh, Third one is again you need to plan everything according to your your finances. Second one is asset allocation. Asset allocation is basically diversifying your investment across various asset classes. It could be a tangible asset, it could be an intangible asset. You have to allocate everything on an equality basis so that if one pillar falls, you have the others to uh, support the building or the mansion you have made. So the various asset allocations could be anything, could be in real estate, could be in in stocks, or could be in gold, could be in mutual fund. There are a lot of tangible and intangible assets you can have. Uh, Third is asset management. Active management of investment portfolios is a necessity for a wealth management. Basically, you have to keep on monitoring the allocated asset. What is its current worth? What will be the worth in future? How will you grow that? How will you how will you know when to sell that particular asset, or when that asset is no longer an asset, but it is a liability for you. So you need to manage. The management part can do that work. Real estate planning. Moving on to that, again, legal tools like uh, trust to wealth transfer. You need to have a legality that who will be the owner of the whatever assets or whatever things I have. So that is called real estate planning. It will also mean only for the real estate version of things, like buying and selling of real estate things. Again, let's talk about now tax accounting, ensuring the compliances and the tax efficiency. Tax compliance is basically very important to manage your finances, because the minimizing the tax liability through the legal methods are very important for having a proper wealth management. Moving on to the next slide, we have the objectives, which are present preservation versus uh, growth. So let's talk about these things. So first is diversification. As we talked about in earlier slides, diversifications of the assets are very much important, because you cannot have all the things on on one basket basically. So spreading your investment across different asset classes such as stocks, commodities, golds, bonds, real estates will be reducing the risk, because the if one pillar falls, there are many others to save yourself. So let's talk about the second part is risk management. We have talked this about earlier as well. Using the tools such as insurance. Yeah, we haven't talked about the tools, but using these tools such as insurance and other risk elevated things, you can safeguard your investment or whatever things you are insured for, your wealth basically. Next we talk about is tax planning, making the most of the tax efficient investment accounts to limit your tax liability. Uh, Basically, if you invest in the limit of whatever the government has offered, or the government has barred, so you need to limit your investment according to that. Uh, Very next we have is invest inflation protection. Okay. So investments in the assets that holds or increases the value over time, such as a proper or inflation protected bonds. Uh, Inflation protection is basically when you know the inflation rate of your economy, like ours is 6%. So you need to invest in such things that are beyond that percentage, so that you can earn real returns rather than just reducing your amount. Moving on to the further slide, we see is forms of wealth management from ancient civilization. So yeah, we were talking about wealth management till now. Now we are talking about what are the what are the forms of uh, wealth management. So, ancient civilizations developed early forms of wealth management through practices such as lending, accounting, and using commodity-based systems. So, earlier we used to have barter system wherein we exchange good for goods. So, over that time, we don't have such thing called as wealth management. But as and when currency, the global currency appears, so then we have something called as saving, and that saving was a part of wealth management. Okay. So using that commodity-based system, the methods offered centered around it, around the temple and royal houses, laid the groundwork for later systems. We used to save our money to the royal family's houses. Moving on to the next slide, we have is banking and wealth in medieval Europe. Okay. So in Europe, basically, the banking and wealth were inward with the rise of commerce and the transformation of the monetary economy. While the concept of modern banking emerged, later societies developed system for managing wealth and trades and handling those financial transactions was itself a challenge and gold myths and uh, regional orders were also there. So that's how the banking era starts in the Europe. First, it was started in I guess in Europe. Next, we have is wealth advisory in resistance era. Okay, so evolution of wealth management. How does the wealth management starts at the first? We are talking about through traditional method, and then uh, we moved on to more for innovative or technological driven method. So these all things actually uh, played a very important role in transforming the wealth management as a whole. So this might be metaphorical, not literal, but the period was rebirth by industrialization. Driven to the changes, we talk about technological advancement through automation, through AI, and through robot advisories. We have chat GPTs and everything. Though they are not that very specialized in wealth management, but they do provide a very good solution to it. And moving on to the changing customer expectations. Demand for personalization and digitalization services are risen very soon, very fast. Basically, the expectations of the customer handling that their own wealth is being uh, risen demand in those things. So due to those things, people have now apps for wealth management. We have Pro, we have lot of investment apps to manage your finances, manage your money. Uh, we're talking about now regulatory developments. So regulatory developments, global norms, and global compliances we have. So this helps in performance of the legality part, the wealth management, whatever the technological driven things we are approaching should be uh, should be based on the compliance. So fourth one is enhanced efficiency and collaboration. Better advisory and client interaction is very essential uh, because without client interaction, anyone cannot, cannot know, won't be knowing what exactly the customer is looking for or what exactly the client is looking for. So using fintech tools, we have financial plus technology. This is called fintech. Using these tools, uh, ach- we can achieve the necessary. Moving on to the next slide, we have is evolution through colonial and trade and empires. The phase of economic exploitation. We have a chart. Let me minimize this a bit. Yeah, now we can now we can understand. So the phase of economic exploitation. Basically, the it has from three period: the period of merchant capital, the period of industrial capital, and the period of financial capital. These three terms are very much important because this is this is the history part of the changing part era of wealth management. Okay, so we move on. See the merchant capital part, which is basically focuses on trade surplus and colonial exploitation. There's only focuses on trade surplus. Whatever the things are there, we have to gain a surplus and we have to reinvest that amount. Mm, Now, period of industrialization, where industrial capital we have, is there are free trade capitalism, rise of industries and open trade happens. Basically, there are no charges, the routes are open, there are free trades. Period of financial capital. Uh, so dominance of banks and stock markets and investment instruments have risen in demand, and due to this, we are in this period right now. The financial capital and industrial part. Uh, Now, if we switch to the next slide, we have here is industrial evolution and capital accumulation. The industrial revolution and the capital al- accumulation were deeply intertwined, and increase in the profit and industrial production fueled the further investment and expansion, while technological advancements served the demand for capital goods. The cycle of innovation and investment drove the rapid economic growth associated with the Industrial Revolution. So, moving on to the next slide, we have is mutual portfolio management. Unlike the other slide we are talking about here is mutual portfolio management. The involved this involves basically the process of creating and maintaining a portfolio of investment by manually entering and updating all investment details. This happens manually. You can change as per your wish, and such as a position and transaction directly into a system. Of course, you can basically whatever things you like. There are no restrictions in adding manually, or the things you have in one basket. You have to pick the basket. You can change the basket. You can change the uh, you can change the stocks or whatever the investment articles are there. You can change it. This approach provides the full control over your portfolio. This is a very good way. If you have a very good financial knowledge, you can go for this part because everyone has a bit of different keen interest towards a specific investment. So based on those things, you can manage your portfolio according to your will and wish. Of course, it is your money. You should own decide what are things you need to do with that amount. The approach provides full control over the portfolio, but requires consistent efforts to keep records accurate and updated. This is very necessary because if you have the control on your own, you must need to have a keen knowledge about and interest about what what is actually. If we move on to the next slide, we have here is Regulatory environment and evolution. The evolution and standard for insurers. So let's talk about what this actually means. The evolution through colonial trade and uh, Emirates, the historical phase, basically. Okay, the Emirates is we are talking about the insurer sector capital standards. First is Solvency One, wherein basic EU capital requirement is studied. In Solvency Two, we talk about risk-based frameworks. These all things are the data given, uh, data driven. And the Solvency 2 basically speaks about risk driven. Solvency 3 over here speaks about the better governance and policy holding protections. Okay. This fourth one is talking about the Basel 3, which is equivalent in insurance. To the forward, we talk about the future regulatory capital and standards. Moving on to the next slide, we have is changes of traditional model. Why there is a change in traditional model? Why we are not following that model? So there are certain changes. Uh, the lack of transparency per se. We have first is decision making process. The traditional system does not reveal how decisions are made and leading to the confusion and mistrust of wealth management for us. Secondly, we have is hidden financial information. The lack of open communication, the lack of open data sharing is is a bit hard in the stakeholders' point of view and verifying the financial health for risk for us. Third is lack of accountability. It is it is often unclear who is accountable and when these things go wrong, reducing the risk of the responsibility. Now we talk about intellectual property rights. Intellectual property rights, as I said, the importance of financial knowledge or the the innovation part might not be protected or fairly raised, which is very important to have an intellectual property rights. And over there in traditional part, we don't have that. Uh, the fourth one is the trust deficit of users and their partners. Uh, Clients, individuals, investors, and collaborators lost their confidence due to above issues harming the business relations. Okay, these all things are these all things plays an important role so that we face these challenges so that we uh, move on to the modern part of wealth management. Now we talk about the rise of fintech industry. How the fintech industry gained so much popularity. This is what we talk about. So now, mm, so now let's talk about the rise of fintech uh, industry. Hello. I think network issue was. Yeah. We were talking about rise of fintech industry. So in the traditional development. So the rise of fintech industry is experienced through a rapid change. Fintech is basically financial plus technology, and this revolutionized the wealth management for us. This fueled the technological and advancement and changing the uh, consumer preference. The rise is impacting the traditional financial services in a various ways, from offering new payment solutions to the evolution of investment management. So, what is fintech? Fintech is basically financial plus technology. So, if we talk about what exactly these terms means, we came across we came across that finance basically binds with innovation. Fintech improves speed, efficiency, and accessibility of financial services through innovations, mobile apps, AI, artificial intelligence, blockchain technology, and digital banking. Example UPI in India. Our country in terms of financial and technology, fintech. The combination is such a way that the whole country is basically using this uh, payment. Payment it revolutionized how we how we used to spend our money. Uh, we totally went on to the digital currency part, and through payments we can do a lot of things basically. Uh, Moving on to the yeah, we can have a one global example as PayPal, which is again a good example for innovation in fintech uh, advisory using the investment part. Moving on to the next slide, over yeah, moving on to the next slide we have is evolution of fintech. So the evolution of fintech. Fintech was 1.1, which was started on 1986 and was basically a traditional part, wherein telegrams and early stock tickers and credit card and ATM machines focuses on digitalization of banking function. This whole thing was just there to revolutionize how we pay the amount we have. FinTech 2.0, which is basically online banking, which was rise of internet happens when 1987 globally the internet actually boomed over that time, and this also improved due to software and multiple changes. So banks started using the software and digital portals. FinTech 3.0 is basically present. What we are talking about, the apps, the blockchain technologies, the investment AI, digital wallets. These all things are very much important in those ways. And blockchain-based solutions and artificial intelligence reshapes how people save, investment, and borrow. This timeline shows how technology has transformed from financial services over time. How the how the technology has changed, how the technology has managed to change itself. Moving on to the next slide, we have uh, a minute. Yeah. So, what is the need of why fintech is rising? Why fintech is actually uh, used so prominently? First thing is smartphone and internet. Internet, using the internet, we can access globally, we can connect globally, and that happens due to technology. Connecting, adding finance into that, we can now use stock markets, we can access stock markets, we can do online banking, we can do, or we can borrow things, we can invest in bonds. It's not about just investments, it's about managing our daily activities, demanding for instant services. Services such as you can you can buy and sell anytime, anywhere. That is a part of and parcel of the service. Moving on to the gaps in traditional banking, of course, there were a lot of gaps in traditional banking. There are lot longer process. There's a paperwork and everything. We have skipped all those things and now moving on to a more innovative part of the wealth management. Digital natives and users. These all things uh, just will- goes into the digital native users. Of course, any data, any department, anything isn't possible without having a proper user base. So the rise of this technology and people friendly, this gained a popularity and development of and help in the rise of the fintech technology. Moving on to the next slide, we have is fintech segments. First is digital payment. We have the best example is UPI. UPI has gained so much popularity in very, you can say, very less time. So gaining the popularity of UPI. So if we talk about a minute, so hello, yeah. So if we talk about digital payments, one thing comes to my mind is UPI played a very important role in rise of financial technology. It's the best example I can get in the previous recent years from India, and also gained so much popularity in the rest of the world. Basically, gave us an example out of it. Moving on to the lending platform. Yeah, a lending platform is basically the loans which we are being provided. Wealth and technology and robot advisors, insurance, uh, tech and red tech, blockchain and crypto. Blockchain and crypto are the recent ones. If we talk about the crypto part, crypto is still a digital currency we have, and digital part of investment. It is not recognized by a lot of countries, including India. Moving on to the next part we have is fintech versus traditional finance. Fintech companies excel in offering personalized experience by leveraging data analytics, uh, artificial intelligence, and uh, machine learning. For us. In constant, traditional bank offers rely on digital services, standardized services, due to their large customer base and legacy system, making personalized a challenge. So fintech is still in a developing stage. It is still in a developing stage. We have not reached quite far, and we have not left the traditional financial world still now, and there is a still scope of improvement. Major technologies, major fintech technologies, firstly AI and machine learning. AI, which is artificial intelligence, that is very important in terms of in terms of challenges, it provide the rules and regulations of, of the part, the blockchain technology, the cloud computing, AI apps, biometric security. These all things are with the help of technologies. So machine learning nowadays, if you talk about ChatGPT, it is totally based on AI and machine learning. It has a thinking ability. If you raise a question, provide you an answer, provide you a solution or multiple solutions, whichever you need to pick up. Blockchain technology, again, a very beautiful example of technology. Cloud computing, again, storing the data. That the best thing, I would say, because often when we lost something like our data, the most important in humans' life nowadays is their data, data of banking, data of personal information, and lot of data. These all things, if you lose, they're stored in cloud compute. In fact, they're stored somewhere in the cloud, and you can recover it. It's the best way to, uh, you know, best way to ensure yourself. Biometric security. The security is very much very much expensive this time. And biometric is the best part, wherein nowadays everyone has that. Moving on to the next slide, we have global fintech leaders. We have global fintech leaders. Global fintech leaders have Stripe payments and Robinhood investments, investing robo banking and Ant investment research and Payment India, Paytm India. So digital payments solutions like mobile wallets, UPI, contactless payments, and stripes like Domino's digital payment processing. Robinhood investing is basically disturbing investments um, of commission-free trades. Revolt is often offers digital banking and multi-currency accounts. These are things actually. In Financial Asia and Paytm is lend in mobile payments and financial services. Uh, Fintech startup in India. Okay, let's talk about how is fintech doing in India right now. So as you can see, go through the map first, and then I'll explain you every detail of it. Because if you don't know what all things are investments are there, read the information. This is so very real information, real-time data of 2023, which I have managed to gain because the data funding across the relational guide of 2024 hasn't been published by all the sectors. So I have tried to find out the major things out of it. Go through it once and then I'll recover the data. So fintech funding across India 2024, Bangalore has remained the epicenter of it because a lot of IT companies we have here is in Bangalore. The investment part is in Bangalore, and of course Mumbai is gaining the investment part. And nowadays, if you see, Mumbai has if we have the real time data 2026, Mumbai has gained a lot, and Bangalore has also gained a lot. So few more has gained, and IT parks have gained a lot of data. Moving on to the next slide, we have is fintech startups in India. For stock market trading, we have Zerodha, the best example I can get. There is a platform, the seamless platform by the users, by the traders, basically to improve the hardened stock markets. Credit and rewards, if we talk about grow investments, Navi, lending insurance, all those things aspects were in the startup of fintech. Uh, we have also Angel Fund, we have also Grow. These all things are also well segmented uh, investments currently. So yeah, this limits actually the part. Next we have is role of regulators. Uh, See, there are few regulators. We have in investments such as RBI. RBI is lending and payment system. RBI is basically used to monitor the financial part of the currency part. The banks is on under the Reserve Bank of India, and SEBI we have is for Stock Market Security Exchange Board of India, which is mutual funds, investment technologies, and all those aspects we take of way in this part. Moving on to the next slide, we have is impact of banking sector. Uh, the shifting of banking sector from digital to traditional part to digital part. We have seen the khatas where we used to store each and every information of in every part of data. Nowadays, we have a lot of financial and digital part as well over here. When we talk about this shift, uh, it's helped in the, let's say, transfer of data from the return form to the digital part. Basically, nowadays we have very systematic part where the data has to be taken, where the data has to be drawn. We can access it as and when we want. This happened way too before, way too early. And the next one is branch closure and partnership with fintech. Moving on to the fintech and financial illusion. Fintech for financial inclusion is empowering access, expanding quality, scaling use, and enabling usage. So, if we more discuss this part is more like yeah, this part is more like a evolution. So fintech is evolution. The evolution of fintech is basically from yeah, the evolution of fintech, wealth management by addressing the traditional efficiencies and the user experiences. The uh, enhanced personalization, AI-driven tools, and accessibility has been providing various roles in terms of financial and technology and large use cases. And these all things basically help the inclusion of fintechs. The quality improves, the usage improves, the scalability, the mass scalability of fintech. Uh, took an example of ChatGPT. If you have uh, accessing power, everyone can access it. Yeah. So yeah, we were talking about fintech. Yeah, we were talking about fintech financial inclusion, and I have given you an example of ChatGPT. So this is an example of ChatGPT wherein you have scalability. Number one, yeah, you have a scalability of globalization. You can access it globally. Now, secondly, we have quality, of course, expansion. We have the second version coming in place very soon. And the third part is enabling usage. Uh, the paid part isn't for us, but the version which is available to everyone is good enough for part of. Uh, so let's see. We are talking about evolution right now, and I have given you one example. This could change actually a lot of things. And if you have the empowering access of financial, this was just an example of ChatGPT. Uh, take it as take it as example of crypto. Crypto is a digital currency, but it is now a base. It is expanding globally. So what all challenges do we face in fintech, financial technology? First is security. Again, first is security. Again, the more and more digital you go, the more and more threat will be come across. We have again, the second one is privacy. The data is stored nowadays digitally, so it is accessibility. The accessibility of data is not enabled only to you, but also it is enabled to a lot of other people as well. Given a take who has the access to the data. Again, we have digital currency or digital things. Whatever the data, the scam is coming up right now. Uh, this all things happens not this all things doesn't happen early, right? Whenever we have the certain data, these all things hasn't happened earlier. Nowadays, we are moving on to this part, and everything has a solution. So this all things will also have certain solutions in your future. Moving on to the fintech wealth management, the benefits of using fintech. Uh, yeah. So benefits of using fintech in wealth management. So the one of the most beneficial thing I can see is it is very cost efficient and scalability part of it. Like nowadays, you can use a banking application with no cost, and it is highly scalable. Go globally to the uh, you can go globally to it. Again, uh, the next point is transparency and security. Uh, as in when we talk about net backing and everything, these all things are highly secured. And of course, there are drawbacks. There are drawbacks to everything, but we are secured enough to manage proper wealth, increase accessibility and convenience. So the best benefit of using the financial technology is its scalability and accessibility and convenience part, basically. So the convenience and accessibility of the wealth management, wherein you just have to have an internet connection and you can gain to a lot of other parts of financial sectors. You can invest, you can invest while you travel, you can invest while you're on holidays. So these are very much convenient for you. Moreover, enhance the personalization and customer experience. Mm. Moving on to the fintech in daily life. So, if we talk about fintech in daily life, we have over here is QR payments. The best example I can get from here is UPI. which has revolutionized the way we spend money. Yeah, yeah. I've been giving you the example of UPI for quite a long time because I find it quite interesting, right? The way they change their perspective. Uh, let's talk about now. Secondly, we talk about instant loans. Now we talk about budgeting. There are certain AI algorithms which we have with us to provide you a certain parameters wherein how to spend, what to spend, and how much to spend. Things which we need, things which we gained from, we can spend that amount of it. So these are things are important. Secondly, what are the future aspects of financial technology? So, as in when I talk about future aspect of financial technology, the first thing comes to my mind as payments. The way we changed the way we pay to whatever the customers, whatever the vendors we have using UPI, that actually changed a lot, and people are actually still learning. I'm talking about globalization. People in globe are still learning from our sector as well. Moving on to why AI is necessary in wealth management. Of course, AI is uh, a very essential part. As we moved on to this slide, we talked about where payments fund, payments funds, applications, budgeting, yeah, budgeting and everything. These all aspects. These all are the underlying assets of AI only. Let's talk about budgeting for a say. If you need to, if you have certain things and certain problems in your life, if you have, let's say if you have certain amount and you need to budget yourself, then you have to, what else people will do? People will go to ChatGPT and check what all things I can made out of it, what all things are necessary, what all things are needed. I'll budget everything. So this is how AI is doing. This is how AI is basically improving the way we manage our wealth. So moving on to the AI part, we have discussed further. Next, we have is traditional wealth management challenges. Human manual, yeah, um, yeah. Traditional wealth management challenges. Management is a high cost of uh, accessibility and limited time of your client computing and everything. So onboarding time, these all things are very much important from traditional point of view. Uh, Manual analyzation of wealth, and then you go through the things to have high cost of advisory. The cost of advisory is so very important. Moving on to the limited personalization and source skills are the rule. So, moving on, a second of it. Yeah, benefits of AI in health management. As we speak this before, right? We have spoke this before that real time highlights, the real time things are so very important. Let's say the personal things. AI using the technology, right? If you talk about any stock, you get the real time data. If you talk any GDP, anything, prices and everything, you get the real data. When you get the real data, you have the real thing, and you can actually do a lot in those things. Scalability part, let's say scalability, the advisory part. These all things are actually important, and I cannot I cannot tell you how these are working so far. Error detection, fraud detection, these all things. Moving on to the AI-driven portfolio management. Again, this is a part where we are covering the the first session of PPG, the AI-driven part. So the AI-driven part is automating the investment analysis. AI evaluates the stock, bonds, and non-performing assets for your earning report, real-time monitoring, track global markets 24/7, and alternate data. Users basically satellite imagery and social media trends for unconventional insights. Uh, Risk management stimulates the scenarios and to rebalance everything. So yeah, this is the part where we conclude our presentation for the first session. The fintech is demonstrating the conclusion we can hear is fintech is demonstrating the wealth management, embracing the finances into a daily life and revealing AI, TV, and futuristic solutions. While challenges are still in this, and when we uh, go, go deeper into it in the next session, we'll more further talk about the AI part and the more advancement part of this version. We have talked about a lot of things right now. Hope you remember all of this. Yes, so I have completed the traditional part and the visual part of wealth management right now. And in the further sessions, we will be continuing with the the AI part